have Charles here from Hastings Technologies. The company is a Western Australian company focusing on rare earth. Charles, could you talk a little bit about the business model of your company?
Yes, we are based in the middle of Western Australia, somewhere around the middle. The project is called the Yangibana Rare Earth Project, and rare earth has 17 elements. And over the last 4 years, we've done all the exploration work, we've done the scoping study, we've done the pre-feasibility study, and now we will be finishing our definitive feasibility study by end of this month in November. And when we publish it, we will have all the details set out as to what we are going to do as a next step, which is actually to take the mine into production, and that is about 2 years from now. We will produce about 15,000 tons of a carbonate called the mixed rare earth carbonate, and this particular Yangibana ore body has a unique characteristics in the sense that it is very high in neodymium praseodymium. As I said earlier, rare earth has 17 elements, and the two key elements that's needed to make permanent magnets is neodymium praseodymium, Nd, and Pr by the chemical symbol. And 1/3 of a permanent magnet is NdPr, and the increased usage of permanent magnets is due to obviously the digital devices that we all use, like your smartphones, robotics, drones, even medical devices, and of course talked about a lot is wind energy in terms of the wind turbine, and as well as electric vehicles.
So what kind of growth potential do we see in this kind of industry?
In the electric motors market, we, according to industry reports that we have seen, they are talking about 9%, 8.5% compound annual growth rate for the next 5 years. And that means to say that the commodity price for neodymium and praseodymium will be sustained because just this year alone, the NdPr prices have increased by 60%, and I think they will stay pretty firm and might even increase a little bit. Obviously, that's going to be driven by the speed of take-up of electric vehicles and renewable energy sources.
Can you talk a bit about the time schedule of your company? What do you plan in the near and in the medium future?
Okay, we will start work in terms of the infrastructure work on the ground at the mine site beginning of next year. The intention is to then start construction of the mine when the infrastructure work is done, and that is probably towards the later part of next year, and then into production by end of 19 or early 2020.
Do you have any sales targets?
Yes, we have 40% of the 15,000 tons of mixed rare earth carbonate that we produce when we come into production already under an offtake. We have 3 offtake customers, and we are in discussions with a few German offtake customers and 1 or 2 Japanese offtake customers as well. Our target obviously is to probably have 70% of our production under an offtake before the plant is ready to deliver the product, but the rest of the balance of the 20 to 30% we will sell spot in the market. Our basket price currently, based on what the commodity prices, is about US $30 per kilogram. With 15,000 tons of mixed rare earth carbonate, when you work it out on the separated rare earth oxides basis, it is about 8,500 tons. So if you take the $30 basket price now, multiply by 8.5 million kilograms, because it's $30 per kilogram, you're talking about 240 to 250 million US dollars of sales expected when we come into production, assuming, of course, that the prices stay where it is.
And what kind of profitability can you achieve?
I can't comment on the profitability simply because as we are an Australian listed company, sure, we are sensitive to the regulations by the authorities. By the end of this month, when we release our definitive feasibility study report, I can say the details of the profitability and the mine economics will all be contained in that report. And that's due end of the month.
Okay. But could you elaborate a bit on the cost side as well?
Well, the capex is, we've put it up on our website. Our capex is going to be about 330 million thereabouts, and the opex is about 130 million. The mine, typically to fund the mine, you need about 2/3 debt and 1/3 equity. We will look to do the project funding after the DFS is completed. We expect to have a healthy margin, and if I were to just hazard a guess, not that I'm guessing, but management obviously have its estimates, and I'm sensitive to the fact that we need to be careful what we are saying to the public before the report comes out. I think the margin will be easily in the order of 20%.
Quite promising, actually. Of course, mining business is people's business as well. Can you talk a bit about your experience?
Okay, I have brought into the management team people who has what you call been there, done that. They have a lot of mining experience. I have the ex-chief operating officer of Linus, which is John Cross Steinmetz. When he was at Linus, he was responsible for the commercial activities, in other words, sales and marketing at Linus. On top of that, I have also brought over to Hastings two other experienced Linus individuals. One is our chief metallurgist. He's in charge of the processing of the beneficiation and the metallurgy. His name is Robin Zhang, and he's from China originally. He spent 8 years at Linus, and he went to university to study rare earth, and he worked in China with rare earth companies. So he's very experienced in the chemical engineering aspects of rare earth production. Then to build the mine, the construction of the mine, I have recently brought in Viv Roberts. Viv Roberts is Australian. He used to work for Fortescue, which is a very well-known mining company. Also Thiess Mining, which is a subsidiary of BHP, and also Roy Hill Iron Ore Project, which is Gina Reinhardt, the very wealthy Australian lady. So he has a lot of mining experience. He's 55 years old with 35 years mining experience. And then for the construction of the plant, in terms of the beneficiation as well as the hydrometallurgy plant, we have an ex-Linus gentleman as well. His name is Leong. He spent 4 years at Linus, and he built the Linus Phase 2 production plant on time, on target.
Thank you very much. The last question, where do you see the highest risk in your company?
Well, there won't be a single highest risk. There will always be risk factors. We don't know how the global economy is going to pan out. Right now, everything is very positive. Everybody is very upbeat and quite bullish. The stock markets are very bullish. And so if the macroeconomic environment were to turn down, or the world suddenly go into a unexpected crisis, then we would expect that will have a knock-on effect for mining companies. And that in itself, the macroeconomic picture is something that nobody can predict. But obviously for us, we see ourselves having a healthy profit margin in the business. We like to think that with the adoption of electric vehicles and consumer electronic devices, white goods like refrigerators and washing machine that will migrate towards permanent magnet motors to make it more efficient, energy efficient. I think the demand will still be there, but I obviously cannot tell you that we will not have any impact. I will say that if we keep our debt equity structure on a very manageable level, which means 2/3 debt and 1/3 equity, the interest servicing burden for the company should not be too high. The cash flow with $200 million of sales, we should be able to sustain if there is a sudden change of the macroeconomic events.
Okay, thank you very much, Charles, for this interview. Thank you.